What's up everybody, welcome to Money Management channel. My name is Andrei and today I'm gonna be doing an update on MMTLP and FINRA saga.
I got the cash in the bag, stadium packed. Born a rock star in this life, gonna live it up.
And for today's video, guys, I have several quite interesting news. First of all, I will show you an update that is related to Scott's lawsuit, and I have to admit that it is a quite interesting information. On top of that, I will show you some legal actions that will be taken within next several weeks, and I have to admit that these legal actions will be performed by the person who has, let's put it this way, who has the superpower against the statute of limitation. On top of that, I will show you part 4 of the investigation of George Palikros in regards to the illegal actions on the US stock market. So, and before we dive deep into all of this, guys, please hit the like button for YouTube algorithm and drop me a line in the comment section if you think my videos are valuable for you. And let's start with this tweet that was published by Scott just a couple of several hours ago. And he wrote, MMTLP. The ruling in the Alpine Securities case by the DC circuit now means that Trott versus Rubinstein and the motion for declaratory judgment against FINRA now takes on even more importance. The DC circuit kicked the Alpine case back to the US District Court and in doing so stated it had no right to rule yet on the constitutionality of FINRA. So, the MMTLP situation is driving the US District Court in Vermont to make the call one way or another. FINRA does not have an immunity from a declaratory judgment proceedings. This is the ruling in District Columbia. And he added the link. And guys, I have to admit that it is quite interesting statement, and let me remind you that I don't have enough experience in this type of litigations and I don't have any degree in this field, but guys, Scott's actions are quite interesting because I have to admit that he's trying to challenge the FINRA's immunity, and if he succeeds in these actions, definitely it will be a huge precedent for us and for entire retail community. And let me show you what did Mark Basile respond to Scott's tweet. He wrote it 11 hours ago. Hurry up, Scott, and file a notice of supplemental authority. Include the decision in your filing. Hurry, it might impact your pending consideration on your arbitration motion. So, quite interesting update, and guys, you know that Mark Basile has a huge experience in this type of litigations, and I have to admit that this type of advices might help Scott to achieve his goal, and definitely he has to listen to Mark in order to make his case even more powerful. So, we will see what will be the next step, but for now, guys, take a look right here. Your favorite SGM, the person who filed, who basically wrote a letter on November the 9th that was addressed to Greg McCabe and NextBridge Hydrocarbons Board of Directors. And I covered this letter basically right after it was published, and Daniel is the first name of your favorite SGM, set a clear deadline on November the 20th. And this deadline, as you might know, has passed, and we don't have any updates. That is why, guys, just a couple of days ago, he wrote this letter again to Greg McCabe and NextBridge Hydrocarbons, and I covered it in the video before my previous video. And again, nothing has changed, and that is why, guys, let me show you his latest update. So he wrote this tweet 17 hours ago. Step 2, and this one, guys, this one was step 1 on November the 9th. So step 2. There was no response from yesterday's email, so be it. I sent this off to NextBridge Hydrocarbons via email, and in the afternoon I will send the demand letter out through registered mail. I already know where it goes from here, and I'm fine with it. challenge accepted. And guys, I want to pay attention to this letter, and I want to show you it in details. So as you can see, it was written by Sergeant Major Daniel R. Oxer, and it is addressed to Board of Directors of NextBridge Hydrocarbons. And guys, first of all, he explains the problem, and I have to admit that he holds 20,075 shares of NextBridge Hydrocarbons, and he stuck with about $60,000 in value in this saga. And he explains the legal reasons, the legal basis for shareholders and rights and requests. And I want to pay attention to the to the demands itself. And he wrote specific demands. In accordance with applicable Texas, Nevada, and federal laws, I demand the following: A. Delivery a share confirmation. Verification and documentation on whether all 165 million shares of NextBridge Hydrocarbons have been fully delivered and recorded, as well as the total confirmed share count. Failure to do so may suggest unrecorded shares or unauthorized short selling. B. Explanation of SEC S1 filing withdrawal. And guys, it is quite interesting demand. Explanation and supporting documentation regarding NextBridge Hydrocarbons' decision to withdraw the S1 filing for the proposed NewCo subsidiary, including the impact on assets like the Orogrande prospect. And guys, as for now, this is one of the main questions that is related to NextBridge Hydrocarbons Board of Directors in general, and to Greg McCabe in particular, because NewCo was the company that basically was a remuneration for the people who transfer their shares to AST. And for some reasons, right after Greg McCabe showed to the broader audience of MMTLP shareholders this information, he withdrew the S1 statement, and basically he cancelled the deal. On top of that, guys, we know the problem with the Orogrande prospect and the leases that were cancelled by the university lands, and the reason of this cancellation was the breach of contract from the NextBridge Hydrocarbons side, because NextBridge Hydrocarbons didn't pay in May of this year for these leases. Next one. C. Disclosure on university lands lease termination. Details and records regarding the termination of the university lands lease. Clarify NextBridge Hydrocarbons' efforts to secure revenue alternatives. And these two demands are extremely close one to another, because in my opinion it is just a part of one case. D. Conflict of interest inquiry. Justification for acquiring interests in Louisiana Heritage Play from McCabe Petroleum Corporation, considering the involvement of NBH's chairman Greg McCabe in the transaction. And guys, we know that right after the university lands leases were terminated, right after that, Greg McCabe stated that he will add to the NextBridge Hydrocarbons intrinsic value the assets from Louisiana Heritage. And it was another assets from another company of Greg McCabe. And guys, it was quite suspicious, but why did he do it? And I have to admit that it is, in my opinion, kind of I see some kind of similarities in the Heritage Play and the NewCo case. Don't you think that it also might be withdrawn? So, quite interesting in my opinion. E. Rationale for Capca loan terms. Justification for the $2 million loan at 12% interest from Capca Holdings, owned by Clinton Plant, including any independent oversight and justification for the higher than average terms. And guys, the next part of this letter is followed: proposed legal actions and remedies. I just want to read you the definition itself. If NextBridge Hydrocarbons fails to respond substantively and in full compliance with Texas, Nevada, and federal law, I will pursue the following legal actions. Petition for court order inspection under Texas Business Organization Code paragraph 21.218 and Nevada Revised Capture Statutes chapter 78.257. Next one. B. Derivative suit. C. SEC compliant for potential Rule 10b5 violations. And D. Claims for damages. And I have to admit that it is a very concise and pretty straightforward bullet points, and I have to admit that for now I 100% agree with Daniel, because this latter might lead us to another action that potentially might be performed by the next Bridge Hydrocarbons board of directors. And for now, guys, we have lack of these actions. So here's one of the most important parts: timeline for response. Please provide a comprehensive response to both the demand letter and the request for information memorandum with all relevant documentations within 7 calendar days of receipt of this letter. Failing to provide a timely and a complete response will initiate the legal steps and actions as outlined above. And the conclusion: as a shareholder who has invested nearly $60,000 in Next Bridge Hydrocarbons, I expect prompt, clear and substantiated answers in the line with statutory rights and fiduciary duties. NBH's lack of transparency in addressing these questions is unacceptable, and I am prepared to assert my rights through legal avenues if necessary. I look forward to your prompt response. So guys, I have to admit that we have another deadline that potentially will expire at the very end of November, on November 30th, depending on the date of where this documentation will be received by Next Bridge Hydrocarbons. But let's assume that it will be the end of November. And right after this, I have to admit that Daniel has a quite unique position on the legal field right now, because he doesn't care about statute of limitations. He was an active military servant during the MMTLP saga. That is why statute of limitations doesn't apply to his case. And that is why, guys, I think for now we have another potential path to the resolution that will definitely lead us to something big. Because in my opinion, his questions to Next Bridge Hydrocarbons in general and to Greg McCabe in particular might lead us to very interesting conclusions. Unfortunately, not all of the MMTLP community members realize that at least some actions that lead us to the case where the MMTLP shares were U3 halted, at least some actions were made from the Next Bridge Hydrocarbons itself. And that is why at least some of wrongdoers are on the side of Next Bridge Hydrocarbons. Might be. And it is just my opinion. But I think these questions should be answered, and we have to see some kind of updates from this side. So, let me show you another quite interesting update, this time again from George Polycross, and I covered several tweets that he wrote basically recently. And part 4, I have to admit that it is another quite huge part of his investigation, but I want to pay your attention to just a couple of parts. So, bonus part 4, hedge funds and high-frequency trading, the cost of playing fast and loose. I know it is a lot to take in. I'm not an expert, but I'm now starting to understand enough to be dangerous. If you see anything you don't agree with specifically, or it is factually wrong, correct me, add your comments and do your research to see for yourselves. Now for the bonus round. Let's paint a picture of a hedge fund with say $10 billion in assets under management, and near limitless leverage called charged capital. Internal leverage limits. Who needs them? Charged capital isn't subject to specific regulatory caps on leverage, meaning they have full discretion to set their own limits, typically based on their investment strategies and risk tolerance. This freedom allows them to go big, and often they go all in. When combined with high-frequency trading strategies, this kind of power is a game changer. The only real limit, getting caught, but with only a speeding ticket type fine. It's just another cost of doing business. Here's how this all plays out, with examples of big league strategies and the resulting consequences when things go wrong. This is based on my part 3 list, but this time adjusted for large AUM aggressive leverage players like Charles Capital. And guys, in the next part of his tweet, he explained all the actions, illegal actions and let's say gray actions on the stock market with the consequences for these companies who performed these actions. But I want to pay attention to the conclusion. And he wrote this. So what are other regulators outside of USA doing to protect their investors? The EU's 30x leverage cap, a contrast in regulation. Now let's compare this with the European Union's regulatory framework, which has taken a more cautious and restrictive approach to leverage. The European Securities and Markets Authority, ESMA, imposed a 30-to-1 leverage cap on retail clients for major currency pairs in 2018. This was a direct response to concerns about the risks retail traders were taking on with high leverage, often leading to significant losses. While hedge funds in the European Union can still access higher leverage levels, for professional investors, the ESMA's limits on retail trading provide an essential contrast to the near-limitless leverage available in the United States hedge fund world. In essence, the EU's regulations aim to protect retail investors from excessive risk exposure, whereas US hedge funds can operate with fewer constraints. It is a step in the right direction, but the disparity in the regulation highlights a stark contrast between the two regions. The EU's 30-for-1 leverage cap protects retail investors from market manipulation and excessive risk, ensuring that firms operating in that region are held accountable for the risks they impose on clients. In contrast, US hedge funds with near unlimited leverage are allowed the flexibility to engage in market manipulation with hedge funds, exploiting this system to maximize profits and often facing no more than minor fines when caught, costs that are trivial compared to the profits they make. Call to action. The new US administration must act. Dodge. The new US administration might address the imbalance between hedge funds' unlimited leverage and the weak regulatory constraints they face, in my opinion. With market manipulation running rampant, it's time for the US to follow the other examples and impose stricter regulations on hedge funds using high-frequency trading strategies. The market should not be a playground for select few with deep pockets and near unlimited power to manipulate prices. This is a pattern that is repeating over and over in many stocks from Tesla in the past to DJT currently and everyone in between. It's time to level the playing field, not just for retail investors, but for the health and fairness of the entire market system. And guys, I 100% agree with George Palikras, because on the one hand, it is a very complicated problem, but on the other hand, guys, without the knowledge, without any actions towards the resolution of this problem, we will not solve this problem and we will not be in fair and transparent markets. That is why we have to act, and I have to admit that for now, new administration and the Dodge agency might solve this problem, and the deadline for this agency is set to July the 4th of 2026. So, and I think because of this, the next year will be crucial and very indicative in this field. And guys, let me tell you my personal story. I have a wife and 2 children aged 11 and 15, as well as a small dog. After 30 years of living in Russia near the Baikal Lake, we decided to move. Now we reside in Serbia. Although I don't own any MMTLP shares, I invest a lot of time creating daily MMTLP videos. I have been doing this every day without days off and holidays for more than 1.5 years. Now I wish to buy back this time from my family, from my children. We've agreed that I will ask the MMTLP community to support me, and I will give all the money to the children. Therefore, if you believe that I am providing useful content for you and wish to support me, you can join my Patreon account. For $5 a month, I will add your name to my list of supporters if you wish. Thank you in advance. The link you can find in the description below. So, I think that's all information that I want to provide you. If you like my video, please hit the like button and subscribe to my channel, and see you guys and girls next time. Bye!
I got the cash in the bag, stadium packed. Born a rock star in this life, gone live it up on the attack. Baby,